Yo, what's going on, guys? Welcome back to the channel, man. Today's video, it's gonna be a little bit different. I'm gonna be going over, the system more for like people that don't, maybe that are newer to the channel and are trying to learn the system and what it is. So, yeah, this won't be this is pretty much like a trade recap of trades we've taken the last like 1 to 3 months, in the Discord and stuff like that. I do share all my trades and stuff like that in the private Discord, which is down below. $15 a month. It's super cheap, man. If you want to learn how to trade, that's the place to be. You're not gonna find a place better than that for the price that it's at. $15 a month. Most people's Discords are well over $50 a month, even in the hundreds of dollars for some Discords. But I don't do that. It's only $15 a month. I want you guys to learn and be able to bank with us. So what I'm going to be doing, I'm just going to go over briefly of what the system is for the newer people that aren't in the Discord, or that just don't know what charts I'm setting and stuff like that. And yeah, so pretty much this whole trading system it works best on SPY. Okay, when you watch the SPY charts, you want to be using this on SPY. It still works well on individual tickers as well, but it just works best on SPY. That's just how it is, just how it's made. So what the things you need for the setup of the charts. Number one, Thinkorswim is what I use for the platform. It's the best platform for this. It's just very clean charts. I feel like it just follows the best with the SMAs and whatnot. So yeah, number one, Thinkorswim. Number two, the actual chart setup. We have the 10 and the 50 SMA, which is what you see on the screen right here. The green line is the 10 SMA, blue line is the 50 SMA. And also you need Heikin-Ashi candles, which is why the candles look different than normal candles. You need Heikin-Ashi. Just works best with it. Respects the SMAs better than normal candles. And also you need to have extended hours turned off on your charts, because if you have them turned on, the chart may look a little different. So if it looks different, that's probably what the factor is. You got to turn off extended hours. And yeah, that's pretty much the chart setup. So after you have the chart setup, you have to know how to pick the contracts that we watch every single day. So there's two different types of contracts we watch. Number one, it's the 0-day contracts, which is 0DT. We pick new ones every day. How you pick these, pretty simple. It's based on where SPY opens at. So you have to find the exact opening price of SPY every day, and you round to the nearest dollar. So if SPY opens at 550.40, okay, that rounds to 550 because it's below 0.50. That's your cutoff for rounding. If it's above 50 cents, then you round up. If it's below 50 cents, you round down. So you get you get 550, and then from there, that's where you add and subtract one to get calls and puts. So from 550, you add one, you get 551 calls. You subtract one, and you get 449 puts. Those would be the two contracts you're watching for the day. And yeah, those are the two contracts you're watching. Depending on what the Friday contracts look like, you'll base your trades off of those. But now for the Friday contracts, it's the same exact thing, but just different rounding numbers. So instead of rounding the nearest dollar, you round to the nearest fifth, okay, and then you add and subtract 5. Same type of thing with the 0 days, except it's you're doing round to the nearest dollar and adding and subtracting 1. So if we open at 547, that rounds to 545. And you add 5 for the calls, you get 550 calls, and then you subtract 5 for the puts, you get 440 puts. So, and then you're going to be using those Friday contracts Monday, Tuesday, Wednesday, Thursday. And then on Friday, you pick new ones. You do the same exact thing I just told you guys with the rounding, and then you do the same thing again on Monday. So Monday and Friday, you pick new Friday contracts, because the ones from Monday on Friday, those will be now 0-day contracts. So you don't want to be using the 0-day contracts for the 30-minute. So what you do, you select 1 week out for the next Friday, and then on Monday you do the same thing, pick new ones, and then use the expiration for that Friday. You don't go 2 weeks out, you go 1 week out for the Friday contract. So that's how you pick them. I don't want to spend too much time going over how you pick the contracts, but that's all you need to know on how to pick them and whatnot. But yeah, it's pretty simple. Just hopefully you know how to round. I hope you know how to round, so you can get the contracts every day. But yeah, and then how we base trades off of these contracts. So if you look on the 30-minute time frame on the Friday contracts, if I could find a good chart example. Okay, we'll start off with hopefully there's a cleaner one that I could show you guys. It's more, I'm looking for one that's crossed on the 30-minute. Okay, right here, boom, perfect. All right, so first thing you want to know when you're trading these charts is how to trade them. So first thing you need to know is what the current trend in the market is. That's what the Friday contracts tell you. the 30-minute time frame on the Friday contracts will tell you the trend. So in this case, we had the 560 calls in July. So the other side of that would be the 550 puts. So in this case, the 30-minute is crossed on the 560 calls, which means the 10 SMA is crossed above the 50, which means the green is crossed above the blue, and that's how we determine like the trend in the market. Since the 30-minute is crossed, the 10 is crossed 50, the market's bullish, and you want to be trading on that side of the trend. So using the Friday contracts, that will tell you what trades you take with the 0-day contracts. So if we go back to like a 0DT chart, I bet there's a cross somewhere around here on the 5-minute, if we could find it real quick. Okay, this is the 30-minute again. 5-minute. Okay, like I said, that 30-minute chart is cross bullish. So what are we looking for when we're cross bullish? We're looking for a cross on the call side on the 0-day contracts. You don't want to cross on put. Most ideal trade is trading a 0-day cross in the direction of the Friday contracts. So if the Friday contracts are bullish and the market's bullish and we get a cross on the call side 0-day, that is your best trade like probability. Like that will hit like 9.9 times out of 10 type of trade. So that's what you're looking for. And for like a cross to be valid, this is another thing you need to know. When I say cross, I mean the 10 crosses the 50, but this 50 SMA right here has to be sloped up. Like this 50 SMA, which is the blue one, has to be flat or curling up like how it is here. Back here, I don't think we ever got that curl. It depends what the like chart looked like at the moment right there, because there is some, like, as you can see, it did like curl up a tiny bit right there, but it's still sloped down a tiny bit. You need the 50 SMA to be flat or curled up. When the 50 there will be times where the 50 SMA is like sloped down and pointing down, and you don't want that. That's not a type of trade you want to take. And as you can see, this worked out beautifully. We got the cross, we dipped down to the 10 right here, and we just ripped. And your stop loss on these trades are below the 50 SMA. That's your ultimate stop right there. If we get a closure below the 50, that's your stop loss. And when we are trending and we get this initial cross, you could just ride the 10 SMA. So we got the initial cross right here, we dipped down to the 10, and even if we did close below the 10, I'd probably still hold this for like a close below the 50, just because we are trending. Most likely that 50 dip gets eaten up. But yeah, you could just ride this 10 SMA when we are trending, and then once we close below, that's your exit point, and that's where you could look onto the next trade. So yeah, as you can see, I'm just going to go through all these charts for you guys. That's like the premise of the strategy. It's pretty much trading crosses, negative crosses, and things like that. So the different types of trades that you'll get when trading this, let's say the market's trending. Okay, I'm just going to give you guys like scenarios. The market's trending bullish, and we get a 0-day cross on the call side. You want to take that. That's a trade you take. A trade you don't want to take is if puts end up crossing on the 0 days, but the 30 minutes cross bullish. There are some circumstances where I will take it, just depending on like what the 30-minute chart looks like. But I'm not gonna go over that. It'll make it way too complicated. So best thing to do, not take the trade. What you want to do though is wait for a negative cross on puts. So I'll try to find an example of what a negative cross looks like. So right in here, this is what a negative cross looks like. These puts ended up crossing at open, and then they went negative. Negative means the 10 SMA crosses back below the 50, and that's what happened right here. As you can see, once we ended up crossing below, these contracts just ended up dumping the rest of the day. You know, some of that could be from theta, but this negative cross worked out nicely. If you look, is this the same contract? I'm not sure yeah, okay. And then the calls did the same thing. Calls ended up crossing negative right here. The 10 crossed back below the 50. And another thing that you need to know, it's like the same thing with like the cross on the 0-day calls. So like for the 0-day call contracts, you want the 50 to be, you know, flat or pointing up when you're taking a cross. Negative cross, it's like opposite. You want the 50 SMA again to be like curling down or flat. It's like the opposite of like a call cross, because sometimes the 50 SMA will still be slanted up, and then price will like bounce right back up, like back to the 50 and then cross again. You need the 50 SMA to be like trending down or flat or like curling down to like take the negative cross. If it's still sloped up, do not take it. Not a valid trade. So that's what like a negative cross looks like on you know, this is the call side in that case. But if we're bullish, like I said, and puts cross, don't take it. Wait for the negative cross on the contracts. So yeah, it's just think, if these were puts, the puts end up crossing, we're not taking it. You wait for the negative cross to take, because you want to be trading in the direction of the trend that's going on. So yeah, and then a scenario it's like the same thing for the other side. Like if the market's trending bullish, okay, and calls cross, not taking this, and then we wait for the negative cross on calls to go short because the market is trending bearish and you want to trade in the direction of the Friday contracts. It's the best way to trade. You don't want to be going against the trend too much. Most of the times you'll get burnt doing that. And yeah, and then there's another scenario. Okay, so market's either gonna be bullish, bearish, or neutral. Neutral means the 30-minute time frame on the Friday contracts, neither side is crossed positive. So I'm trying to find a 30-minute. So right here we know 30-minute is crossed. Obviously 10 crossed above the 50. The market's trending bullish in this case since it's 560 calls. If we look, if there's an example here that where the puts are crossed, then you'll know that we're trending bearish. I'm not exactly sure if I do have a put cross. I mean, I feel like I should. Give me 1 second. I don't know if there is a. Are these all calls, bro? This must have been when the market was just absolutely flying, and we were just making bags left and right on this. But okay, I think we'll be running into one right here. I'm on the 30-minute. There should be one here on the 30-minute. Okay, yeah. So right in this case, 30 minutes crossed on puts. That means the market's trending bearish. Okay, since the 30-minute is crossed, the 10 crossed above the 50 right here. 50 SMA sloped up. As you can see, there's a difference between these two right here. So this side of the contract, this is why we wait for the 50 SMA to flatten or curl up, because as you can see, this ended up crossing right here, but it didn't play out. Why? Because the 50 SMA is not level or curling up how it is over here. So this is not like a valid 30-minute cross. The market's not trending bearish at this point. So for it to be trending bearish, the 50 SMA, the 10 has to be above the 50, and the 50 SMA over here has to be flat or curling up to be like marked as trending. So it'd be better if it's curling up like this. When it's curling up, that's a great sign. Like you want the 50 SMA to be curling up. Over here, we never got a curl. So in that case, the market's still not trending bearish. Even though the 10 is above the 50, we're not trending because this 50 SMA has to be flat or curling up. In this case, it's pointing down, so we're not trending. So those are the things you need to know. Some people get confused on that and just think, okay, the 10 SMA is above the 50. Even though the 50 is down, they still think it's like considered like a valid cross. But that's something you need to get in your head, that you just gotta wait for that 50 SMA to be flat or curling up. So, and then the scenario where we're neutral is where the puts and the calls are not crossed. So I know, yeah, okay, nope, that's not the 30-minute though. Trying to find, there's one example of the 30-minute. Okay, so in this case, the 30-minute. 30-minute on this chart is not crossed. The 10 is below the 50, and they're not crossed. So if this chart was on the put side as well, puts and the calls are not crossed, that means we're neutral. So in this case, the trades you want to be taking are just 0 DT crosses and 0 DT crosses on like the negative side, so negative crosses. Those are like two types of trades you want to be taking. You could also play these rejections at this 50 SMA. The 50 SMA on the 30-minute marks pivots in the market. I always say this, it marks usually lots of tops and bottoms when we're neutral. And one thing you need to know is that when we're near this 50 SMA, okay, obviously this is on the call side. So in this area, on this candle up in here, when we're getting near that 50, let's say the 0-day calls cross. You do not want to be taking that trade because we are near a strong resistance on the 30-minute. So that 0 DT cross on calls is not a trade you want to take. And that's something people also get confused on. They see the 0 DT cross and just immediately slap it. So you don't want to do that. If we're near this 50 SMA, you do not want to be taking that trade because we're at a strong area of resistance. There's no point in taking a cross on calls. It just wouldn't make sense. Why would you want to be long into a strong resistance spot? Yeah, it could break and work out, but a lot of times you will get burnt. It's better just to sit out and wait for like a negative cross on the calls that they did cross. So that's like all the types of trades with the system. There's like an overbought trade, which I don't want to go over yet. I do have another video uploaded on the system, so go watch that. I'm pretty sure I did cover overbought in that video. This is just more so the basics of the system and how you want to trade it, and also just tips, for other people that are trying to learn how to trade the system if you're already trading it, or just like a refresh of what you already know of the system. But yeah, hopefully you guys understand that. Like 30-minute time frame gives you the trend, and then the 0-day contracts give you like the intraday trend. 30-minute crosses are like provide bigger moves when we're trending and we get a cross in the direction of trend. That will also give a bigger move. When we're neutral though, it's more conservative. You're not going to get as large of a move when we're neutral versus when we're trending. It just makes sense. Obviously when we're neutral, we might experience chop. That's where you can expect chop. When we're trending, you could expect to have some larger moves. So I'm just going to go through the list of these different charts and just explain them on how you trade them. So in this case, this is just a classic 0DT cross. I'm not exactly sure the context of the market. I think we were flipping bullish here, but yeah, let's just say we neutral or bullish. I don't know which one it was, but we got a 0-day cross, 10 cross above the 50 here, 50 sloped up, valid play, and look at the move we get. Very nice move. You could trail this 10 SMA the whole way. As you can see, we never closed below it. Yeah, that's like the way to go when you're trading these crosses. You could trail the 10 for your stop loss, because if you do that, a lot of the times you could squeeze out a ton of points, because some days we will literally just ride this 10 SMA like the whole day, and you could literally hold until it breaks. That's the great thing about the system. You can milk out so many points. But yeah, next chart here, we got the put side, 0-day puts, the 10 cross put the 50 here, 50 sloped up, valid trade, and look at the move we get. We held this 10 the whole way up. This probably made new highs after this, if we could check. I think these are different contracts though. Okay, I guess that was the trade. As you can see, the cross worked out. Beautiful trade. 5-minute time frame here, we ended up getting a cross, and look at the slope on this 50. 50's up super hard, 10's up super hard, and yeah, the 10 SMA is like the spot you wanna like it's your make or break spot kind of for the some trades. If we're neutral, you want to hold pretty much until the 10 or the 50 breaks. If we didn't get like a decent move yet, I'd wait for the 50 to break. But if we did get a solid move, you could just trail the 10. And the 10 a lot of times marks some bottoms on the 0-day contracts. Like here, we dip down into like the 10 area. It won't always tap it exactly, but if you get a close dip, you could add there and bang. As you can see, we got a very nice move off of there. Pretty sure this is the same contract. Yeah, look at that move. We dipped down to 10, we rode the 10 all the way up, and bang. And I'm pretty sure the market flipped bearish here. Yeah, it did. So in this context, the market was bearish, and this is a trade you really want to take because the move will be aggressive. And as you can see, that's exactly what happened. 10 cross above the 50 in the 30-minute, we're trending bearish, and that 0-day cross goes absolutely crazy because we are trending bearish. And this is the same contract. So I didn't go over this yet, but the trades in a trending market are 0-day cross on the direction of the trend, which in this case it's bearish. We're bearish, so the cross on puts, valid trade. Your next very good opportunity when we're trending is this 50 SMA dip. This 50 SMA dip when we're trending is a very good trade, high probability setup that you want to take. So if we're neutral, this is not a trade you take. Yes, it could work out, but when we're neutral, that 50 SMA is less likely to hold because there's no trend, there's no strong favor of the bulls or the bears, and you don't want to play that 50 dip. So what you do is wait for closure above the 10 to enter if we were neutral. In this case, we're bearish, so you buy this 50 SMA dip, which is at 3.5 right here, and look at that, we got immediate bounce. I'm pretty sure this ended up continuing higher. I don't think I have the screenshot, but yeah, you buy this 50 SMA dip. Since we are trending bearish in a trending market, you buy the 50 dips. Pretty simple. Neutral market, you don't buy the 50 dip because it's less likely to hold. You wait for closure back above the 10. And in this case, that 10 SMA is your first spot of resistance. So if you want, you can move your stop to break even, or take a trim here and then move your stop up as well, because if we do want to break below the 50, it's going to hit the 10 here and then come right back down and break below. But a lot of the times when we are trending, that it's gonna break the 10 eventually. So it's up to you on the risk if you want to trim some here, and then move your stop to break even, or just hold the full position with the stop at break even. Personally, I'd probably take a trim, and then if we close back above the 10, then you could buy some more. That's probably the best way to do it, and that's what I would like doing. So yeah, and then here we go, another just classic 0DT cross here. 10 cross above the 50, 50 sloped up. We got this dip down to the 50 SMA. A lot of people will get would have gotten shaken out of that. If you're not familiar with the system, you see this massive red candle, you'd sell. But we dipped down to the 50. There's no reason to sell because your stop loss is a closure below that 50 SMA. And look at the move we got. Bang, textbook move. 5-minute time frame. 520 calls cross. Okay, we got the 10 cross above the 50. 50 sloped up, dipped down to the 10/50 SMA area. I think this is the same chart actually. Yeah, this is the same chart as the last one, so I already went over that. So in this case, I'm not exactly sure if we're trending or neutral, but if, let's just say we were neutral, you don't buy this 50 SMA dip. Yes, it worked out, but that's just the rules of the system. You don't buy that 50 dip if we're neutral. You wait for the closure above the 10, which is right here, and that if you waited for that closure, look at that move we got. Boom, nice move. And let's just say we were trending. Okay, you buy the 50 SMA dip, and that worked out beautifully. You could sell, when we get to the 10 a little bit, move your stop up, and then add more once we get the closure above, and that would have worked out very nicely. As you can see, we closed above, and then we continued up higher. And then yes, we did lose the 10 right here on this candle, and that's where your runners, you could have stopped out on. And then it did close back above, which you could have entered, but it's better to wait for that 50 SMA dip if we are trending. So yeah, next chart we got a put cross, 0-day put cross. Oh yeah, I don't even think I went over the time frames. So 0-day contracts, you always want to be on the 5-minute. The Friday contracts, the main time frame, like the 30-minute, that's what determines the trend. But you also use the 1 hour, 2 hour, 4 hour, and daily to see how far the trend goes. And what I mean by that is the 50 SMAs on the 1 hour, 2 hour, 4 hour daily will be like resistance areas, and that's where we could possibly reverse from. So I'm pretty sure there's some screenshots of that which we'll go over. But yeah, here we got a 10 cross above the 50 SMA. I'm starting to get that curl up, and bang, look at the move we got. Textbook move. System does its thing day in, day out, and boom, we even got more of a move there. I think that's the same contracts. Wait, no, it's not. Never mind. Wrong contracts. This is a call cross on the 5-minute. Boom, massive move off of that cross. And then again, 538 calls, 0-day contracts. We got the cross, and look at the move we get. Very good stuff. And then again, 538 calls, dip down into this 50 SMA. In this case, I'm pretty sure we were trending. I want to say we're trending bullish. Yeah, so 30-minute right here is crossed. That's why I had that there. So in this case, we are trending bullish, so we do buy this dip at the 50. Look at the precision of this, man. Tap the 50 to a T in reverse. And yeah, you could sell some at the 10 and then wait for the closure above to add some more, which is right here. And I'm pretty sure we definitely saw a continuation move off of that. So in this case, 10 cross above the 50 on the 30-minute. The 50 SMA is sloped up, and what we could expect is a continuation move higher, and for that 0-day chart to continue a move up. As you can see, look at this move we're getting. Just textbook stuff. Once again, this is why I say you trail the 10. Look at this. We closed above, and we just continue holding that 10 SMA the whole way up. I'm pretty sure this continues to go further as well. Look at this. Look at this chart. I mean, buy the 50 dip, add more on the reclaim, and then you just wait until the 10 breaks to sell. And look at that. Your runners are just absolutely printing because we held this 10 the whole way. And yeah, there's no reason to sell. We never closed below the 10. No reason to really exit. Obviously, it's good to trim on the way up as you get like 50, 60, 70, 80 points on NQ. But yeah, 30-minute. Look at that move we got off the 30-minute. The trend. This was, I remember this time. This was such a choppy time, but this, like, we never got like a clean cross. And then once that 50 was trending up, that's where the move happened. And then again, market's still trending bullish. That dip down to the 50 instantly got eaten up. It just doesn't get easier than that. Such a good trade. Like the 50 SMA dip, trending market, you get paid. And this is where you use like the higher time frames, like the 1 hour, 2 hour, 4 hour, to judge how far the trend's going to go. So in this case, on the 2 hour, we are nearing this 50 SMA, which is a resistance spot. So you could expect some sort of rejection. Sometimes these could be difficult to play. Like playing the rejections, because there could be some drawdown before like the reversal actually happens. But the more like slope down the 50 is, the stronger the resistance. The flatter it is, the less resistance it is. As you can see, we popped in that 2 hour and it got a rejection. But yeah, I mean, I don't have any other screenshots to like show you off of this, but since we did reject there, this probably ended up dipping down to the 10 or something like that. But you just got to watch out for these higher time frame 50s, and if they're sloped down hard, there's a chance that we do get a rejection off of them. And then this is just an intraday chart. When the market is neutral, you could play these 50 SMA rejects, just like how you do on like the 30-minute. But for intraday, for like really choppy, as you can see, the 50 SMA is well respected. Again, 5-minute cross here. We got the cross. I'm not exactly sure the context again of like if we're trending or not. If we were trending, Obviously this 50 SMA dip was a thing like you definitely want to take. And then here's the full chart. We reclaimed the 10 here, got a nice move. What else we got here? 5-minute rejection on the 0-day contracts. Again, if the market, let's say in this context, the market's trending bullish, you could take this rejection on the put side right here, because most likely that's not going to cross since the trend is bullish. As you can see, we popped in that 50. 50's down hard. If we're trading bullish, this is a beautiful trade to take, and you would have, top or bottom ticked the market right there as we got that rejection. 30-minute here, again, the 30-minute, it's when we're neutral. The 50 SMA marks pivots in the market. When we're nearing this 50, most likely the market has limited upside since these are the calls. And yeah, would not take a call cross in this scenario. As you can see, we popped up into that 50 and got a rejection. It won't always hit the 50 exactly. Sometimes it rejects before like this. So yeah. And then in this case, what you do want to do in a trending market on the 30-minute, once the 30-minute crosses, all dips to the 50 SMA you want to buy. Like that's another good opportunity to ride the trend. Right here, we pop down to the 50 on the 30-minute, and bang, look at that move, man. Look at that move. Instant pop off of that 50 SMA, and then we also got a call cross. I'm not sure when the difference was between these two contracts, but yeah, another cross example. 10 cross above the 50, and you don't immediately buy the cross in this case because the 50 SMA is sloped down hard. See, as you can see, 50 SMA is down super hard. You wait for the curl, and that happens somewhere in this area, and then we got the massive explosion on the contracts. And look at this, man. We were definitely trending bearish at the time here. As you can see, this is why I say you just ride the 10, man. Ride the 10 SMA, and look at this. We don't close below it until right here, and we got a crazy move out of it. These contracts went from like probably 70 to, or probably like $1, let's just say you got in, all the way to over $3 is when we close below the 50. And then, since we are trading bearish most likely, this 50 SMA dip down here, you buy it and bang, look at that move. It just doesn't get easier than that. Trending market, you buy the 50 dip. Neutral market, you wait for the closure above the 10. You know, the 4 hour is where the trend ends like 95% of the time. So when we were nearing this 4 hour 50, whenever this was, you could have expected a really nice pop on, SPY, because these are the puts, which are nearing the 4 hour 50. And yeah, we got a nasty rejection off of there because the 4 hour, higher the time frame, the stronger the resistance. So we got a massive dump off of there. And then the second time we popped into this, I remember I did get burned on this one, but it's something now that I would not take again, because normally we get the initial reaction or rejection off of it, and then the next time we go up and test it, there's a good chance we do rip above it and break. So yeah, that's just something you got to keep in the back of the mind. The more times we test the 50, more likely it's going to break. So yeah, that was just an example of 4 hour rejection. And then again, this is like the 30-minute rejection that we talked about earlier. 50 SMA marks pivots when we're neutral, so we were popping into that 50 SMA, limited upside, would not take a cross on calls in this case. And yeah, we got a rejection off of there. 5-minute again. I think that went hand in hand. Maybe no. Okay, maybe not, because they're different contracts. But the 50 SMA slowed down super hard. On the put side, we're probably neutral in this case, so you could play the rejection off of there. And it is better though to wait for a cross. The 50 SMA rejections aren't the most ideal trade, because one of the they're eventually gonna break and get a cross going most likely. So when we have multiple tests of the 50, it's best to sit out after that. But initial reaction off the 50, wouldn't be surprised by when it's sloped down super hard like this. And then with that rejection off of the 50 on the put side, good chance it goes and pops in the 50 on the call side. So once we got this pop up into this 10/50 up in here, it's not on this picture, but once we did, that's where you would sell that rejection at the 50, or move your stop up as we get a reaction off of it. And you'd want to be all out at that 50 right there. Next up, we already went over that. It was negative cross. Just the textbook 0-day cross on the call side here. 10 cross with the 50. 50 sloped up super hard, and bang, massive move. And then this is the same contract, I believe. Yeah, the market, I'm pretty sure, was trending in this case. If it wasn't, same thing. You just wait for the closure above the 10. If it was trending, you buy this 50 dip and you get paid a bagger. As you can see, look at that move, textbook move. Here's a cross right here, 5-minute cross. You want to be long. Bang, look at that move. We held the 10 the whole way. 50 was held the whole way, and bang, look at the move on the contracts, man. These went couple 100% just like that in the matter of probably like 30 minutes. So yeah, system is best there is. And then look at that chart, man. Look at that chart. Doesn't get better than that. Just kind of trying to fly through these charts because the video is already 30 minutes long. Again, 30-minute cross on this chart. As you can see, every dip to the 50 just got eaten up because that is like a big support on the 30-minute. You could buy each 50 dip that comes down there because 50's up super hard. And yeah, just a good trade you want to take. And yeah, right here again, we got another 50 dip on the 30-minute. And going into that next day, I was super bullish, and look what happened. Kaboom. Doesn't get better than that. 30-minute just absolutely exploded. And we got a 0-day cross sometime after that. And we got a massive move off of there. Last chart we got is that 30-minute chart again. I mean, like, it just doesn't get easier than that. Crazy moves off of that because we're trending. 50 SMA is a major support. And yeah, hopefully, you guys learned some things off of these charts. If you have any questions, drop a comment. If you want to learn, join the Discord down below. Ask any questions you want. The privates, to see the trades occur live, throughout the day. By live, I just mean like, seeing them develop throughout the day. If you want to join the free Discord, ask some questions, go for it. I'll answer them. But yeah, that's pretty much all I got. That's like the basis of the system with a ton of examples of how the trades work. So hopefully you guys enjoyed. Drop a like, drop a sub, join the Discord, and I'm out. Peace.